first half of 2022 was tumultuous to say the least. War, rising inflation, rising interest rates, and equity market volatility. That's the backdrop against which we had to deliver investment outcomes for our clients. Happy to report that the majority of our strategies remain above median and above benchmark. It's fair to say that June was a much tougher month, taking a little bit of shine off some of our shorter term numbers, but satisfied that across the ecosystem, long-term investment outcomes remain the focus and we're delivering against those. From a shareholder point of view, RFO was up against last year, supported by decent first half average assets against the prior year, strong performance fee outcomes, and positive mark-to-market delivery in the first half. What was disappointing was NCCF, which was down 6.3 billion rand. Fortunately, the revenue impact was pretty muted because the majority of the out came from kind of low-cost strategies. And in fact, if you add the pretty strong outcome from a new capital commitments point of view in our alts platform of 3.2 billion rand, overall, the revenue impact of gross flows in and gross flows out was actually positive. From a strategic delivery point of view, satisfied that there's an enormous amount happening across the ecosystem and there's a great focus on continuing to deliver. I mean, the main highlight has been the retreading of some of the shareholder-focused strategies and credits that were sitting in OMSFIN and are now facing off into the third-party space, sitting in our alternatives platform. From an outlook point of view, despite being satisfied with the first half outcome, I think there's room for caution in the second half, just given the cautious outlook that we all have for equity market outcomes. I'd like to thank everybody who contributed to this outcome. I think the team, efforts across the platform have been incredible under very trying circumstances.